Faye Corish, Task 4, Question 2, to do with managed budgets and financial plans. A presentation to department heads. As you are aware, we have had several issues with the budget this year. An area that I would like to address might seem back to square one, but I believe that so we can proceed on the best path for this company, we all need to be on the same page regarding understanding of the language of budgeting and accounting. I have prepared this oral presentation on accounting. Point 1. Two basic accounting principles that are relevant to us are accrual accounting, which means that transactions should be identified in the reporting period they are happening and not delayed or fast forwarded to fit cash flows. And the second is consistency, means that we need to continue to use the same method of accounting throughout the whole company until a better service is available to us. Each area of the company should be using the same method so that we're all treating the information of recording our transactions the same. This allows for a better interpretation of our financial results. Point 2. Our company is a legal entity, and as such, we are required to report our financial status and transactions to the Australian Taxation Office of the Australian Government. The ATO includes Income Tax Assessment of Assessment Act of 1936 and 1997, a new tax system, the Goods and Services Tax of 1999, and the Fringe Benefits Tax Assessment of 1986. Were also governed by the rules of the Australian Security and Investment Corporation or Commission. One way we report of our financial transactions to the ATO is through our goods and services tax, which currently stands at 10% on most goods, services, and other items sold or used in Australia. As a company, we apply the tax to our sales or pay on our supplies. We can recoup the tax on our annual company tax return. Also, as a legal entity, we are liable to pay the superannuation guarantee contribution for our eligible employees. All this accounting comes down to keeping accurate financial records. These records will identify our income, expenses, risks, and assist us with planning future budgets. It's also a legal requirement where we need to retain evidence of our sales and purchases made for the company through our tax invoices, wages and salary records, GST documents, records of business assets, fringe benefit tax returns, and superannuation contributions. And these records must be kept for at least 5 years. Point 3. There are 15 key principles of good practice of financial reporting and record keeping. I'll try to summarise them as some are common sense principles. Generally, record keeping should comply with legal requirements, and we have a system that works and is credible. The record keeping must be systematically maintained. It must be managed using appropriate record management programs. And this documentation needs to be audited to make sure we comply with the legislation and regulations. The record keeping is used when transacting business. This means making a document to record the businesses we do. It identifies the need to retain records for a time frame. And record keeping should include all relevant information so that a record can be linked to other records if necessary or stand alone as its entirety. It should be comprehensive, our records, so that people can pick it up and see the whole picture. They should be, it's a means that we need to keep it reasonable so that, and how they're kept is secure. We need to correctly reflect what we've decided and what the company has done, and they need to be authentic of actual actions. And all these record keeping processes should be accessible, retrievable, and available when they're needed. Point 4. Throughout this presentation, I've mentioned auditing. The reason we have a financial auditing system is to establish an impartial, independent check of the company's financial statements, which identify as true and fair image of the financial performance and position of the company. Point 5. When managing budgets, it is clear that we need to understand the effect of providing accurate data and being able to plan a budget in line with the company's timetable. The accuracy involves the inclusion of all taxes, GST, to be identified and recorded. A cash flow program using electronic spreadsheets will allow all department heads to input data at a set time on a regular basis, possibly once a month, to see how actual figures are being identified against budget figures. This makes available time to amend to alter the costs or better reflect budgets. If overspending occurs, then we will be able to identify and rectify it and review it. If underspending occurs, action can be taken to rectify and reassess why this is happening. In transposing this information to ledgers and financial statements, the company can draw its financial position details, which in turn department heads will be able to obtain a clearer picture of where their department and the company is heading financially through the accurate details in our profit and loss statements. I hope this helps you in understanding the basis of why we need to keep these accounting procedures as they are. I thank you for your time, and if you have further questions, please contact me. Thank you.